What's up, my friends? John Baruti from Baruti Success. This week, we're talking about the new business. Not only am I lending, I want to know, and I'm sure you want to know, John, what are you doing? What is this lending thing? What is the 101 of your personal lending career? The newest thing in your repertoire of businesses? Well, Sally, stick around. We're going to go over it. So, private lending 101. John, what is private lending? Well, Carl, I'm glad you asked because I've been doing it for a long time. I'm obviously, because I'm talking about it, making it a business. So what exactly am I doing? What is private lending? What is private lending 101? Now, first, there's multiple ways of lending, right? There's bank lending, there's institutional lending, there's all different personal lending, private lending, hard money lending. There's a poop load of lending. Now, what am I doing? So I am forming a company, BPI, Baruti Property Investments Lending LLC. Right? The purpose of that company is to, yes, lend my own money. So in essence, it's called personal lending. The biggest thing is that it's B2B, business to business. So commercial lending on anything from fix and flips to assets to, and when I say assets, pieces of equipment, medical equipment, construction equipment, anything large enough to do a loan on. Also anything asset based. So if there's a home or an apartment complex or a construction from ground up, those are the type of things that I'm going to be lending on. Also, not as much, but I'm still going to be doing it, and I have done it, is business loans. So you're going in business for yourself. I loan money on that. Now, that one is a little more wonky because yes, there's assets. Yes, I can file what's called UCC liens on the equipment. The problem is those assets are not worth as much as, let's say, lending on a fix and flip house. The house is worth X amount, the renovations are going to be Y, and at the end you're going to have a cost basis of this, and you could sell it for that, right? And let's say, God forbid, the person doesn't pay me back. I can always go in and renovate it myself and sell the house. I have the asset. With a business, that's not as easy. I do it. I will continue to do it, but I'm probably not going to be doing as much of that with my own money. So I am forming like a lending community to do, I don't want to say riskier, but things that I'm not comfortable putting my own money in, okay? So I'm still going to be able to help people with business loans. It just won't be directly my money. It doesn't matter to the person I'm lending to. They're going to get the money no matter what. It's just going to go through underwriting through somebody else. So getting back to it. John, what are you doing? What is personal lending 101? So basically, it's alternative lending. So instead of going to a bank, a credit union, a financial institution, you come to a person like me. Now, why would you do that? Well, there's multiple reasons, and it's not always that the person has bad credit, right? I have multiple friends that are in business that, to be honest, they want to run their business. They don't want to go and have to deal with their accountant and P&L sheets and balance sheets and, all the rigmarole the banks run you through, and then you go through weeks upon weeks. And God forbid if you're doing an SBA, which is the Small Business Association that basically backs up the bank. So if you go to a local bank and say, hey, I'm starting a business. I want to do a loan. They'll be like, okay, but we're going to put you into an SBA loan. Basically, the government's going to come in as long as they say okay, and the government's going to guarantee the loan to the bank. Now, the bank has much less liability. Of course they want to do that. The problem is you're dealing with the government. Not good, right? Now, that being said, I'm going to do SBA loans. I'm going to put people in SBA loans. SBA loans are perfect for the right person. For somebody that needs money fast, like a fix and flip, some construction guy, some local contractor finds a house, gets a deal on it. He knows he can make a few $100,000 on it. He's not getting an SBA loan. They're not doing it. He needs to buy that house today. He needs to renovate it within 30 to 60 days. He needs to sell it, right? He's got to come to a guy like me. Me or a hard money lender, right? So non-traditional lenders. Somebody that can look at the deal, can say, yes, this is worth X amount. I understand construction. I understand how much money you have to put in. I agree with your assessment on how much you have to renovate that house for. And I also agree your non-pie in the sky idea of what you can sell that house for. I can make money. You can make money. Now, why would somebody, again, come to someone like me that's going to charge them multiple points and multiple higher rates over a traditional lending? Exactly what I just said. We can get the deal done fast, we can get it done efficiently, and we understand business. And not saying that the local bank doesn't understand business, but to be honest, small business, local banks, they like putting square pegs in square holes. They don't like round pegs, square holes. They don't like it. People like me, round hole, square peg, round hole, doesn't matter. All day long we do it. Been doing it for 30 years. I understand business. I understand the need for money. That being said, there are multiple ways that not only me as the lender, but the lendee, the person I'm lending the money to, can get screwed, to be honest. And I want to go over those things. Like, why should we do this? Why should I, as the lender, what are the pros and cons? And what are the pros and cons to somebody coming to me? Let's get into it. So how does the process work? So basically somebody comes to me and says, John, again, I'm going to only use a fix and flip theory here. It's just easy for you to understand, but there's multiple ways and multiple things I would lend money on. But for today's, idea and concept, we're going to use a fix and flip, which means somebody's purchasing a house, they're renovating it, they're flipping it back out into the market to somebody that wants to buy a brand new house and not renovate it, okay? Somebody comes to me, first thing we got to do is have a relationship. I can't get, hey, John, I've never talked to you. I never talked to you before. I need $300,000 and a $150,000 renovation loan. Can you give it to me today? No, Carl. Can't do that, Carl. Can I get you the money in a couple of days? I surely can. Do I want to build a rapport with you? You're god darn right, Skippy, that I want to build a rapport. Why? Well, in my world, in the finance world, in the business world, relationship means everything, right? I'm sure I'm going to have multiple deals with this person if he's a real person, right? Here's the process with me as opposed to the process with a bank. Sure, George. Thank you for calling. I have a one-page application. I need your information to put down. I'm going to send it out to my underwriters. I'm going to first take a look at it because I want to, things that are red flags to me. As long as there's no major red flags to me, I'm going to send it out to an underwriter. So now, I say I'm going to send it out to an underwriter. If this is a deal that I want to personally fund, I am the underwriter, right? Which basically means I want to know the house. I want to know how much he's purchasing it for. I want to know his or hers. Let's not be, his or hers idea on how much they think they're going to renovate it for. I want to go and see the house. I want to visit it. I want to see there's multiple things I have to do as the underwriter to get this person the money. Okay? One page. That's all they have to do with me. I'm not going to do any hard credit checks, right? My money is on the house. I'm loaning money on the basis of the value of the house. Now, could this guy have bankruptcies? Possibly. Could he have a 500 or 600 score? Possibly. On this particular type of loan, I'm not too worried about that. I'm worried about their character, no doubt. But I'm not as worried about their credit as I am about the asset. If the deal goes bad, can John Baruti get his money out of that deal? Right? Can I flip the title into my name and get the money out? That's the most important. If I feel I can and make a good amount of money, right? I'll do the deal all day long. That's not my goal. My goal is for George to take the money, flip the house, sell it, pay me my points, pay me my interest, and let's do another deal. That's the goal. But I have to go on the worst case scenario. It's part of lending. Right? What's the worst case scenario for me? Warren Buffett, famous statement, just don't lose principal. And that's, to be honest with you, in the lending world, it's the number one thing, right? Will I get beat on interest? Will I get beat on points? Hopefully not, but I cannot. I cannot get beat on my principal. I cannot get beat on my own money. If I have $100,000 to lend and I would make 20 or 30,000 on it, I can't get beat on the 100,000. That is the worst case scenario. I have to get out of this deal without losing that 100. Ideally, I will make 100% of everything, my points, my interest. That's the ideal situation. Worst case scenario, I have to get out of this deal without losing principal. That's basically how I underwrite it. Now, if I'm not sure who George is, or I don't really like the deal, am I going to turn George away? Well, if George is an asshole, yes, I'm going to turn him away. If I like George, just not too in sync with George, I'm probably not going to use my money on the first deal. I'm building a network of lenders that will lend to people like George. Now, I won't make as much money, but I'll put the deal together and I'll make something on it, right? There's two things happening here. I'm building a rapport with George, because if George goes and flips this house and does a terrific job, the next deal might be my money, right? If he brings me an awesome deal with a perfect asset that he's going to, again, fix it, flip it, and make money for both him and me, absolutely, I'll use my money all day long because I'm going to make more. Again, if I feel a little wonky, I don't know him that well, I could still do lending deals, but it's going to be in one of my preferred lenders, not my money, right? They're going to use their own underwriting. They're going to use their own, basis of figuring out if they're going to loan George money. Still, way better than going to a bank. Here's what you have in the bank. Walk into the bank A. How you doing? I'm thinking of fix and flipping. Sure, George. We have a 32, I'm not even a little bit exaggerating. We have a 32-page application because we're not going to do it. We want an SBA 7B or even worse, 504 loan for you. And we're going to get back to you. They say between 30 and 60 days. That never happens. The last SBA loan I was involved in, it took almost 6 months. Okay? Great deal. The people that bought our ice cream store got an SBA deal, right? But it took us almost 6 or 7 months for them to get the loan closed. It's impossible to do that for a fix and flip, okay? So that is the main reason that somebody comes to someone like me, and that is the main reason that private lenders exist. Okay, so moving along, we just talked about what is the benefit to the borrower, right? We know it's speed, right? Especially for a fix and flip. We know it's ease of use. Okay? We don't want P&Ls. We're not pulling hard credit most of the time. I say most of the time. And when I say pulling hard credit, when you go and get a car or get a house, they say, oh, we're going to pull your credit. That goes against your credit score. We don't do that, right? Because again, the asset is basically what is securing the loan. All right? So those are the advantages to the borrower. Now, what are the advantages to me, the lender? Primarily money, right? I mean, what am I in this for? So a couple of videos back, I stupidly said, I would never start a new business. Why wouldn't I start a new business? Well, because starting a new business is hard, first of all. Second of all the things you have to go through to build a new business and the profit margins, when you get down to the bottom, right? You've paid everything out. Insurance, mortgage, rent, electricity, employees. You get down to the little bit that's left for you. On average, it's between 6 and 12%. Can you make 20 to 25 to 30% being in business? 100%. Can you make 50% margins? 100% margins? 100%. I am not smart enough to be in those businesses. A lot of those businesses are coding, doing programming, IT business, not me. Okay? Even financial services are high profit, and this is a type of financial services, but to be honest with you, I don't want to go and get accreditations. I'm not looking for my Series 7, which is for stock brokerage. I'm not looking to do any of that. I'm not looking to sell insurance. The reason this lending money commercially is attractive to me is because, to be honest, it's not super regulated, right? So buyer beware. The person that is borrowing the money has to be a business, first of all, has to be an LLC, S Corp, C Corp. And the reason being is because I can't lend on a home. You, Sally, are going for a home.
John, can I borrow money to buy my home?
No, Sally, you can't borrow it from me. I'm not a licensed mortgage broker in the state of New Jersey for residential, right? And there's a reason for that, because if I was, it's called predatory lending, right? The interest rates that I'm charging are are high. And to do that to a homeowner, that was 2008, 2009, 2010, 2007. It was called predatory lending. Dodd-Frank came into, there's a whole thing that doesn't allow someone like me to lend to a consumer that's buying a house. Now, does that make me some sort of loan shark or some sort of weasel or somebody that shouldn't be in business because I'm doing bad things? No, because the person I'm lending to is a business person that is making a margin, right? They're not buying this house for themselves. They're making a margin on what they're purchasing. They're buying a business. They're buying a piece of asset, a piece of equipment. They're buying a home for a fix and flip, right? They're going to make money on that. So there's a bigger spread. So they can afford to pay the higher interest and points that someone like me is going to charge them. Now, we're all over the place as far as lenders. Again, there's hard money lenders, there's personal lenders. I'm going to do a whole video on the difference between hard money lending and personal lending. There's a fine line, but basically what it comes down to is hard money guys are basically just for, I shouldn't even say that. They're primarily for fix and flips, and it's structured differently. Personal loans is more exactly in the name. Personal, right? It's people that, and not always people that I know, right? Now that I'm doing this as a business, there's going to be multiple people. I have no idea who they are. But it's still a personal thing. They have to come to me. They have to give me all their information. They have to give me very private information, right? And I'm possibly loaning my own money. And if I can't help them with my money, I'm putting them into a program that I feel comfortable with, that it's going to make them, it's going to make them a profit, right? That all being said, this is to make money. So if I purchased a business, let's call it a laundry business, and I have to do all the work, buy the trucks, get the employees, do all the things to make, let's even say 12%. Let's say net 12% at the end of the day. Why wouldn't I just take my money and lend it and make 15, 20%, right? It just seems like a no-brainer to me. So that's why I decided to do it. So those are the benefits to me, the lender. Now, there is a lot of things that can go wrong, right? But for me, as far as the pros, I love doing it. I've been doing it for a long time. The profit margins are pretty high as long as I don't screw up the underwriting. And even if I don't do the underwriting myself and I put it off to a different lender, I'm still making a pretty good spread between what they're making and what, it's costing you as the borrower. Now, as the borrower, are there risks? Yes, there's risks. Listen, this is not we're not talking 5%, 6%, 8%. We're talking anywhere between 10, 12, 20, 30% if we're talking 35%. So I've seen some loans, not me, but I've seen some loans, again, with no assets, right? So basically a business loan that really doesn't have much assets, I've seen them at 40, 45%. I've seen short-term loans that people take a draw, not people, but the lenders take a draw from your credit card machine at your business, and the people, I'm only paying 30%. No, Carl, you're not. When you add up the points, all the fees, plus the interest rates, you're into 40 to 50% that they're charging you. Now, why would somebody do that? Well, to be honest, the ease of getting the money, right? So they're out there. I'm not going to do that type of lending, but there's people out there that will loan you $50,000, $100,000. If they see your bank statements and they see that you have hundreds of thousands of dollars rolling through your bank account every month, even though your costs and what your revenue are almost the same, they don't care because they're getting their money first. So if they see a ton of money rolling through your bank account, because that's all they want is your bank statements, they're not going to do, again, a ton of due diligence. They're not going to do a ton of credit checking. All these people care about is that they can suck the money out of your bank account, and you are paying astronomical fees. So as the borrower, you have to beware of that. It's probably costing you money to get the money. To be honest with you, it doesn't make sense. It doesn't. But you are so into your business and you don't want it to fail, and sometimes things are not going well. Sometimes you need, cash influx to get you through a hard time. COVID, a key employee went down, you're sick. certain things, you don't want to close your business, you don't want to go bankrupt, you just need that extra 50 or 100,000. Now, is it costing you more than that you're making? Probably. But if you can weather that storm and pay the loan and stay in business, 9 times out of 10, if you get through that, your business will thrive at the end, believe it or not. To get through those humps, sometimes you need that. Sometimes lenders, private hard money lenders, are there to get you through that gap of crappiness. And I've been through it. That's a big reason that I'm doing this, because I had those times that things got really crazy. It didn't make sense. I was using credit cards. The interest rate was absurd, but it got me from point A to point B. I didn't have to close my business, and I was profitable at the end of the day. Now, that being said, are there many, many stories of people doing that and going bankrupt anyway? Of course, absolutely. And this is why it's buyer beware, right? This is why you have to understand what you're getting yourself into. You have to read these contracts. I'm going to and have explained to people that I've lent money to, listen, you're paying a poop load of interest here, right? I've seen their numbers. I see that they can afford it, but if something goes wrong, worse than what's going wrong now, everything can tumble. And I will take the asset back, whatever that be. If it's a piece of equipment, if it's your business, if it's not your home, because I can't do that, but if it's your fix and flip, I'll take that asset and put it back on the market to make my money back. And you'll lose hundreds of thousands of dollars. So buyer beware. That being said, this is a much easier, faster process than going to the bank. Now, just like there's risk to the borrower, there's risk to the lender, right? There's a lot of risk. That's why if I'm using my own money, I have to be smart. I have to know that whatever I'm lending against, let's call it again a fix and flip, that even if the person that I'm lending the money to doesn't fix the house, that I can go in, get a crew of people, fix the house for the budget that I set, or he set, or she set, right? Get the house back on the market and still make my money back, at least hopefully make a profit. I have to make sure I can do that. If it's an asset, like say a piece of equipment, I have to make sure that that piece of equipment doesn't miraculously disappear. Tracking, knowing where things are, knowing the person, knowing the business. There's multiple things that can go wrong here for me, the lender. Right? And I have to be very aware of that. That being said, that's why I charge, and we charge in this industry, multiple points above average, right? Not only points, which means basically it's a cost. So you're coming to me for a loan, I might charge you 1 or 2 points, which is, okay, so let's say it's a $100,000 loan. 1 point is 10%, 2 points, 20%, so it would be 10,000 or 20,000 just to get the loan. Right? And then on top of that, you charge the interest. So it's profitable, but there's a lot of risk to it, a lot of risk. That's why I didn't want to go into the business only with my money. I had said, if I'm going to do this, I'm going to have a network of lenders that are much better at this than me. I'm only going to take the deals I feel comfortable with. And any deal that is still a good deal, right? I can help people. You come to me and I'm like, I got to be honest with you, Tony, that's not a deal I'll do. It's a great deal. It's not something I'll touch. It's either too much, too risky, too LTV, so it doesn't have enough loan to value, right? I'm gonna farm that out. I'm still gonna help you, take you through the process, the 1 page, introduce you, make sure underwriting is not doing stupid things. Anything that they ask for, I'm going to be the liaison between them and you and say, listen, you need your P&L. I know you've never done a P&L. Just send me your QuickBooks. I'll be able to do it. Or put me in touch with your accountant, and me and him will take care of it together, and we'll get underwriting any information they need, right? So you don't have to do a ton of stuff, which is the biggest hurdle for a business person or someone that owns a company to get a loan, because it's time consuming. People don't want to do it. They're like,
I don't want to go through that, John. I'm not doing it.
right. That's why you come to someone like me, or a hard money guy, or another personal lending guy, because we understand business. We understand you're busy. We've been there, right? Most of us, right? We've been in business. I've been in multiple businesses over 30 years. I understand how much of a pain in the butt it is. That's why I know that I can do a great job if you come to me to make your life easy one page, get it done. If I see any red flags, I'm going to tell you right away. We're going to fix them, right? And that's another thing. So you come to me and say, John, I want a business loan. I'm thinking, and I get this all the time because I'm a SCORE mentor, right? So SCORE is a federally backed program. I mentor for free. I mentor people in business or going in business for free. And it happens all the time. They're like, oh, well, I want to go, I need a loan. Well, that's great, Jeremy. But, you have no experience. You have no funding background. We have to set up a business plan. We got to put a picture together, even if it's not a bank, right? Even if it's just a lending institution or personal lending like me, you can't just say, I need money, I want money. It doesn't work that way. There has to be a plan. And that's, again, you come to somebody like me, okay? So on the lending side, big risk of defaults, right? Big risk of losing my money. So I have to be very, very careful. Now, how do you get started in private lending? Well, you do what I did, right? I mean, I sold businesses. I have money in the bank. I have a certain amount of money that I'm going to loan out and a certain amount of money for my nest egg, and basically putting the word out, right? Telling people that this is what you're doing. Now, I plan on building a business with it, not just doing it on the side. A lot of personal lenders, they just do it on the side. Some are rich guys, some are, they have money in the bank. Oh, sure, Johnny, you wanna start a new business? I like your idea. Here's the money. I'm gonna charge you X amount of percent, right? Theoretically, that's kind of what private lending is. Hard money is a little different, more structured, more institutional money going into it. People really understand what they're doing in the hard money business. Private lending tends to just be people that have either sold their businesses or have money that they want to make more than in the bank with, right? I'm actually making this a business. So I'm loaning my own money plus other lenders' money. Okay, so this is what you do. You're starting a business. You start from scratch. I'm starting from scratch. I form my LLC, right? I'm doing a business plan. I'm talking about it on social. I'll probably start doing ads. I have an email list of thousands of ex-customers, both from the ice cream store and from the bakery. And if you're seeing this on one of those mailing lists, I appreciate you looking at it. Right? So this is the process of starting any business, not only lending, but any business. And this is the process that I'm going to go through. And I hope I hope you guys come back every week or however often I put these videos out to see my progress. Because building a business, as I said before, is not easy. And this is the first time that I've ever done anything like this with lending. So it should be fun. You're going to see exactly the things that I preach, exactly the things that I tell other people when they're starting businesses. And we'll figure out if it works, to be honest. We'll see if, 5 or 6 times is the charm for my 5 or 6 business. So at the end of the day, private lending is basically it's basically selling money. In a very simplistic way, it's selling money. I'm selling either my money or someone else's money. You, as the borrower, are looking to buy that money, right? And you buy it by interest and you buy it by points. Right? And we come to a meeting of the minds. There's an asset most of the time that's being signed off on. There's legal documents that have to be signed. And, I'm selling you the money. You're taking the money and hopefully you're making more money on it. That's the purpose of business to business lending. You're either doing a business or flipping a home or buying an asset to make your business better, and you're taking that and making more money. I'm using the money to make money. So that's in the most simplistic way is the best way I can explain on what I'm doing. What is private lending? There's many, many, many other ways of lending out there. I've talked about it, but this is what I'm doing. Private lending. And it seems simplistic. It's not as simplistic as I'm making it sound. There is a lot that goes into it. But again, I love finance. I love talking to you guys about businesses. I love starting businesses, which I know, again, I said I would never do it again. But I lied. Because I can. Because I'm an entrepreneur. And sitting home, doing nothing is not for me. Okay? So I hope you guys love this. Follow me. for the next. I'm going to take you through the whole process. Hopefully we build a great company and you guys can follow along. And if you have any questions, make sure you hit me up. If you have any questions about starting a business, if you have any questions about lending, if you need if you need money, make sure you hit me up, okay? All my socials are Baruti Success. The new company is called BPI Lending LLC. I'm going to be putting up a new landing page within Baruti Success website. This way you can get to me really quick, all right? So thanks, guys. We'll see you on the next one.